This is Behind the Headlines, with behind-the-scenes analysis on issues affecting Pennsylvanians, sponsored by the Susquehanna Valley Center for Public Policy. Now, here's your host.
Hi, from Philadelphia to Erie and from Pittsburgh to Scranton, it's Behind the Headlines. I'm Charlie Greenawalt, Senior Fellow of the Susquehanna Valley Center for Public Policy, and I'm joined by my co-host, Maura Donley. Hi, Maura.
Hello, Charlie.
Why, we have a very good show for our viewers today.
We always do.
Oh, that's true. That's absolutely true. We have a special guest, someone we haven't had on the show before, and someone who's making in big waves in Pennsylvania, and who is going to make, hopefully, the lives of many, many Pennsylvanians much better, and that's Luke Bernstein. Luke, you are the new president and CEO of the Pennsylvania Chamber of Business and Industry. Congratulations.
Thank you very much, and thank you for having me.
Well, welcome to the show. We're happy to have you. Could you tell us just a little bit about yourself? Were you born in Pennsylvania? Where were you raised? Where'd you go to school?
Sure. I was born in a little town. I was actually born in northeastern Pennsylvania, born in Kingston, but grew up in a little town outside of Hazleton. And my family's still there, largely in part. My two siblings, my other siblings outside Philadelphia, my parents are still there. And went to school in Pennsylvania at Dickinson College. And after school, I worked in New York, worked in Washington, D.C., and then back to Pennsylvania. And I've been here. So I love Pennsylvania. It's an incredible state. It's really a microcosm for the country. Just so many different things that we have an opportunity to do here. We have all four seasons, which I think is actually a huge benefit for our state and our economy. We have just a number of different industries, from technology, innovation, energy, manufacturing. You go right down the list. Pennsylvania really has it all. So it's exciting to be in this role and exciting to be working so hard for a state that I really believe in.
So tell us a little bit about the Pennsylvania Chamber of Business and Industry. Who are you?
The Pennsylvania, it's a really interesting question. We are the largest business advocacy organization in the Commonwealth of Pennsylvania. We have approximately 10,000 members of all businesses, of all sizes, in every industry, in every sector, just like your viewing audience in every corner of the Commonwealth. And our job is to really put Pennsylvania's economy at the forefront. And how can we make Pennsylvania a more competitive place to live, work, do business, live, so all of our citizenry can thrive here in Pennsylvania?
Well, I have had a lot of fun over the last couple of weeks doing your coolest thing in PA survey on Twitter, which has been really great. And I understand there's a winner, so let's tell us a little bit about that program and what happens next and who won. Who won? It was it was kind of tied to March Madness. It was really, really fun to vote for really interesting things that are made in Pennsylvania. It
was a great competition, and it was really fun because what we did is we started with 32 different items, things that were made in Pennsylvania, and called the coolest thing made in Pennsylvania. And then we put it into a bracket, and we went through each round where Pennsylvanians got to vote. So when all told, over 35,000 votes were cast.
Oh, that's great.
And crowned Permane Brothers Sandwich as the winner. And, you know, we had a motto in my family growing up, which was, when in doubt, eat. And I think this might have been the motto of other Pennsylvanians, because the food items, the food and beer kept winning, but we featured all different companies. And the really cool part about the competition was people kept saying, I didn't know that was made in Pennsylvania. Where is that made? Whether it be Martin Guitars, the Sheets MTO. We did the Lunar Lander, which is, the Lunar Lander is made by Astrobotic, and it is going to the moon in May. It is going to be the first aircraft that hits the moon since the Apollo. The U.S. led. It's the first privately led mission to the moon ever. And so it will hit there. That actually lost in the first round to the Schmisket. So, but it is super cool nonetheless. Crayola crayons, Mrs. T's pierogies, channel lock pliers, go right down the list. It was really cool.
If you go through the comments too, you'll see a lot more added, because people are like, why isn't this in here? And why isn't this in here?
Yeah.
So I think, you know, when you run the competition next year, you'll just refer back to the comments.
Well,
a lot more stuff.
The Twitter trolling was amazing.
It was
like
fun.
Musselman's, whoever runs Musselman's Twitter feed, that person needs a raise.
Oh.
I mean, they were engaged with them. They had a lot of fun with this. But to your point, there were so many things we missed. From, we added the Hershey Kiss, but we could have added a number of other things. We didn't add Peeps. It was right before Easter. My kids love Peeps. I love Peeps, I'll be honest.
Yes.
So, that's something. Hot tamale. There are so many different food items that weren't in. So many different other manufacturing items. So for next year,
Great stuff.
we need to expand to 64 and get a lot of fun.
Yeah.
And educate people on how things are made in Pennsylvania and why it's important that we manufacture things not only in Pennsylvania but in America.
Yeah.
Well, that brings us to the issue, Luke, of what are the biggest obstacles, what are the biggest situations, the biggest issues facing business in the Commonwealth of Pennsylvania?
It's a great question, Charlie. A number of areas that I would kind of look at the top three, and all in terms of competitiveness. Number one, tax reform. So Pennsylvania had last year the second highest corporate net income tax in the entire country. And so we worked in a bipartisan fashion to lower that CNI to, it was 9.99, and we were able to lower it to 4.99, but it's a scheduled phase down over 9 years. So to the ability for us to expedite that is really important so we could be much more competitive. So the only state that was higher than us at 9.99 was New Jersey. The only thing we should lag in New Jersey is the Jersey Shore.
Yes.
No offense to our friends in Jersey Shore, Pennsylvania, but the Jersey Shore is pretty nice. Outside that, we should not be behind New Jersey in anything. And so we worked hard, bipartisan manner, to get that reduced. 8.99, it went to year one, and then a half point phase down every year. The second part is NOL, so net operating losses. We are an outlier. We are only one of 2 states in the country that would not allow a company to deduct from their losses, to carry that losses moving forward. So from us, how can we encourage innovative companies, technology companies, other organizations, businesses to move here if they can't carry that loss forward, knowing that they might take a loss significantly the first couple of years? That's the second point in tax reform. So we need to be more competitive there. The second piece is permitting reform. Last year, U.S. Steel built a plant in Arkansas. And when they cut the ribbon, the Arkansas governors and U.S. Steel, long-term Pennsylvania company.
Yeah.
The Arkansas governor said, you are going to move in to the headquarters here before you would have even broken ground to get a permit in Pennsylvania.
Oh.
For us, we should take that as challenge accepted. Governor Shapiro has actually led in saying we need to have more permitting reform. Republicans have led and said we need to have more permitting reform. So there's a bipartisan foundation and an acknowledgement that we need to do something better, whether it be PennDOT, DEP. It takes too long to get a permit. And so we are working together actually with the Building and Trades to do this. So last week, I authored with the president of the Pennsylvania Building and Trades Association, not a traditional chamber-leaning organization, to come together and say, how do we put Pennsylvania and jobs first and move the economy forward? Because every day there's a delay. It's a delay in other activity. It's a delay in people getting to work. The third component to this is workforce. I can't go anywhere in the Commonwealth without hearing we need more skilled workers, more trained workers for specific jobs. And that we really need to be working not just within the higher education industry alone, but with businesses and higher ed to come together. Every state is facing that right now. Mm-hmm. And how can we work to be more competitive on a workforce front? So those are the 3 areas that we can do to be more competitive as a state.
And are any of those, is there potential for solving any of these during the upcoming budget season here?
It's a great question. And the exciting part about that is yes. So when I talk about competitiveness and tax reform, the governor proposed continuing the phase down to 8.49.
Great.
There's a bill right now in the Senate that actually expedite that even further. Oh. The governor has signaled he'd be interested in expediting that. In terms of permitting reform, the governor put forth an executive order that takes that first step, which has some timelines. That is going to be the ending report with new guidance is due May 1st. And so we're going to work with them through the process. So if it's not part of the budgetary process, we're working with Senator Kristen Phillips Hill in a bipartisan manner to have something created and legislation drafted, whether it be moves as part of this year's budget or in September, to try and move forward on permanent reform. And we've had a lot of different positive discussions on workforce. So those are things that I think a couple of things that make these different. One, there's an acknowledgement that's broad-based and bipartisan. And outside that acknowledgement, we have solutions to get them done. So it's an exciting, I think, time to be in Pennsylvania, because if we can put this together, we can really make our state more competitive.
Well, very good luck with the permitting reform. We've been hearing about that every administration since Governor Thornburg. And good intentions, but we haven't seen any action. So maybe with the chamber behind it, maybe something will happen at this point. What do you see for the future of the chamber? How are you going to? Do you have plans to reorganize or make new initiatives? What's in the near future for the chamber, Luke?
It's exciting. You know, I think when we came in, as I talked about our membership, our strength lies in our membership. Our membership, with that 10,000 members, we represent over half of the private sector workforce here in Pennsylvania, which gives us a huge opportunity to start talking about what should Pennsylvania look like in 2035, in 2030, in 2025. How do we become the futurist? How do we become the economic driver of our state and work together for policies that are not partisan, for policies that don't have long sides entrenched in the other, but put Pennsylvania at the forefront? So those are the areas where we're going to focus on. Advocacy has been really our bread and butter, and we have a great team at Government Affairs who do a phenomenal job. We're going to continue to lead with that. We're revamping right now our public affairs. We brought in a new person to head our public affairs who's second to none, and it's great experience. It's going to do a great job on the communications front. And then other things, like we talked about the coolest things in PA. Awareness in what we do here in Pennsylvania is really important. Awareness, so when people come into the state, you know, hundreds of thousands of people go to the Yingling Brewery every year. Where do they go after? Do they go back to their state? They probably go take a nap after the brewery. But after that, where do you go? How can we be more effective? Go to Mrs. T's. Look at the southeast part of the state, the central, the southwest, and Erie and Presque Isle. Go to Crail. Go to the different places we have here.
Oh,
go
yeah.
to so
many things.
We know this. We need to do a better job articulating that. And so a big part of the chambers we look forward, how can we utilize our foundation to grow the future, to look forward, to think about what the trajectory of our state is, and how can we be involved in pushing that forward? Great example. We have the World Cup coming in 2026. Let's build back from there. What can we do so when people come and put Pennsylvania on an international stage, how can we make it so that people want to come back, they maximize their time here, and they say Pennsylvania's a great place to visit?
Well, that's Luke, Maura and I can feel the excitement, and I think Pennsylvania is going to be heading in a much better direction here with the help of the chamber, and we look forward to having you back and talk about it again. We'll be right back with another guest on the second segment of Behind the Headlines.
Behind the Headlines is brought to you as a public service by the Pennsylvania State Association of Township Supervisors, the largest, most influential municipal association in the Commonwealth. Since 1921, PSATS has been preserving and strengthening township government and securing greater visibility and involvement for townships in the state and federal political arenas. Covering 95% of Pennsylvania's land mass, townships represent 5.5 million residents, more than any other type of political subdivision in Pennsylvania. Additional underwriting provided by the Worrell Corporation Foundation, based in Carlisle, Pennsylvania, by the Edward H. and Jeannie Arnold Foundation, and by the Pennsylvania Manufacturers Association. Business in Pennsylvania is our business. Behind the Headlines is also supported as a public service by the Pennsylvania Highway Information Association, the go-to source to learn about transportation projects and issues. Visit pahighwayinfo.org.
Welcome back to Behind the Headlines. On this segment, Maura and I are going to be talking about something that's very much in the news these days and isn't going away anytime soon, and that is banking, part of everyone's life and something that is very, very important in to every household.
Absolutely. Yeah.
And we're lucky, Maura, to have two of the best experts with us to talk about banking in Pennsylvania. We have Kevin Shivers with us, who is the president and CEO of the Pennsylvania Association of Community Bankers. Welcome back, Kevin.
Thank you for having me.
Oh, you're welcome. And you were good enough to introduce us to Mr. Scott Patton, who is the president and CEO of the Mercer County State Bank in northwestern Pennsylvania. Welcome to the show.
Thank you. Glad to be here.
We're happy to have you. Kevin, been too long since you've been here. We're glad to have you back.
Glad to be in person.
Yes.
That's true. Last time you were with us was virtually. I guess a good broad question to start us out with. There's segments of the public that are concerned about the stability of the banking industry at this point. How are we doing in Pennsylvania? How stable are the banks?
Well, I remember, I think it was Friday, March 10, and I was getting in my car after work, and I turned on the radio, and they were talking about how the federal regulators had closed down a bank out in western United States, and I'm like, that can't be good for anybody. And, we're talking about Silicon Valley Bank, $200 billion in assets. They had a run on the bank. It was a good old-fashioned run on a bank. Depositors had lost confidence and were pulling their money out. It was leaving the bank at a rate of $1 million per second for 10 straight hours. $42 billion had left the bank.
That's staggering.
It's an extraordinary number, and we'll talk more about the reasons for that. The good news is for your viewers is that community banks here in Pennsylvania, community banks across the country are stable, and we'll talk about some of the reasons why SVB went through the issues that they did and some of these other too big to fail banks, and how there's a differential between those banks and small community banks.
Well, before we get to the what went wrong issue, because we're going to spend some time on that, one of the fascinating issues about the whole run was the role that social media played in it. And that's new. Last time there were runs on banks, there was no such thing as Twitter. And I don't know which one of you wants to sort of talk about that. That was a new element that probably exacerbated the situation.
I would agree, and I think with Silicon Valley Bank especially, they catered to the tech industry.
Right.
So here you had a bunch of customers, tech startups, venture capitalists, had a lot of money in that bank. And somebody figured out that if they had to sell all their securities, they were underwater. They wouldn't have any capital left. Now that has nothing to do with how sound the bank was, but it was a point in time for that bank. Somebody went on Twitter, and the next thing you know, as Kevin said, $1 million a second was running out of the bank.
Yeah, that's just amazing. And that is something that should be taken into consideration going forward, that there is a role that social media will play on things like that. Probably would not have been as bad. Or at least it wouldn't have been $1 million a second, I don't think.
Well, Scott, following up with the Silicon Valley Bank, of course, was the Signature Bank in New York, and they seem to cater to cryptocurrency. How did that all fall into place? Does your bank deal with cryptocurrency at all? And then I'll throw that to Kevin. How does cryptocurrency work into Pennsylvania banking, if at all?
So we do not deal in cryptocurrency. I'm sure we have some customers that have cryptocurrency and digital wallets set up through outside sources. Signature Bank did. Obviously, they were in that very deep. But it is highly regulated. We have to have a plan in place for that. And I think what happened there, without looking into it too deeply, with everything that was going on with Silicon Valley, those people, of course, were connected through Twitter and everything else, and they had some of the same issues happening there. And with digital currencies, they're totally unregulated. There is no regulation around the digital currencies, and I think that was another issue.
Yeah, and I think there are a lot of similarities between what happened with Signature and SVB from the standpoint that, they were dealing with in a tech area. We've seen some significant declines in investments in the technology sector. It was getting soft, and so particularly in SVP's case, they needed capital, those investors, and so they started pulling their money out for that reason. And then all of a sudden, as you said, the social networks really took hold, and once there was that concern, it led to people panicking, and they pulled their money. And Signature, the same way. I mean, actually, one of their board members is Barney Frank, the former congressman who the federal banking regulations named Dodd-Frank is named after. And Barney came out and said that the failure of Signature had nothing to do with any rollback of any type of banking regulation. It was as a result of some investments in not a very diverse portfolio of investments, mostly relegated to focused on technology, crypto, and venture capital. So a lot of similarities between the three bank failures that have occurred.
So would you say mismanagement? Would you call it mismanagement of the? I'm looking for what distinguishes those failures from the community banks that we have.
Well,
from your community
sure.
banks.
I mean, I think you could argue that there was mismanagement from the standpoint that they made decisions about the securities that they were purchasing, and you could take a look at not only at the rates, but also for the periods at which they were holding these these securities to maturity, and we wound up in a circumstance with rates going up interest rates going up 500 basis points. The cost of money has changed, and so the returns on investment are very different today. And so if you were buying securities and you were looking to hold them for the long term, you're going to sell them today at a loss. That's just basic economics. What's different about those too big to fail banks and your local community banks, it's relationships. You have a greater opportunity to talk to a CEO at a community bank in your local community than you would in a large mega bank. Mm-hmm. And so, and as well, because of their size, and that level of communication, it's a lot easier to make rapid decisions or more effective decisions more quickly to be able to avoid any of the circumstances that we found. As well, community banks are way more diversified in their portfolio of customers and depositors, and they work on these issues all of the time and making sure that they manage their risk properly. And that clearly was not something that we saw in the three failures that have come to fruition.
Well, Kevin and Scott, this goes back to this banking situation. At the time, that really put regional and community banks in the spotlight. And particularly, I have some friends who had slightly more than, they have deposits of slightly more than $250,000, slightly more than or guaranteed by FDIC. So they were looking for other regional banks to put their money, and thank goodness they found some. But did you see a lot of this transfer of monies into your system from larger banks during this crisis?
Yeah, I mean, we saw a little bit of Verizon deposits in March, had a lot of good conversations with some of our larger depositors. And, through FDIC, there are several ways to get more than $250,000 in insurance. It's a way an account is titled, and you can have several accounts titled several different ways at the same bank. And you can actually go to the FDIC website and check that out on how to deposit or how to title accounts. And, I was telling Kevin earlier today, a husband and wife with 2 children can get pretty close to $2 million in deposit insurance, just depending on how the accounts are titled.
So in Pennsylvania, there are 124 community banks, and on the Monday after the failure, we took all hands on deck with our membership, and we called every one of our members because the national media were reporting on this as there was this giant banking crisis, and really it's it can lead to a crisis in confidence. And so what was important for us is to let our members know that we're with you, and what are you hearing? And by and large, most of those banks were telling us it was just Monday, that they had reached out to all of their customers to let them know we have an open line of communication, we're here to manage your needs. And to Charlie, to your point, there are resources available to extend that insurance beyond the FDIC. As Scott had mentioned, not only can you diversify among accounts, but there are a number of banks that are part of what is known as the intra-fi network. And so you may have $2 million in a bank, but using the intra-fi network, that is actually spread out through that network, that system, that consortium of banks to help you stay in that manageable level. Why is this important? Because, as you pointed out, in the aftermath of those three bank failures, there were a lot of calls to pull your money out of smaller banks and put them into larger banks. And you don't really need to do that. What you really need to do is have a conversation with the CEO at your local bank and to talk to them about the options that are available to you, because there are a lot of resources to protect your money. You can do it through this intra-fi network. You can do it by diversifying the accounts that you hold at the bank. You can do it through certificates of deposit. You can do it through buying treasuries. So there's lots of ways that your local bank can help you to protect that hard-earned nest egg to get it to that point where you can pay for college or even retirement.
Just walk in and talk to them.
That's exactly right.
Yeah, absolutely.
Yeah. Give you a call. Do you think this crisis has passed?
Well, we're waiting on the report of the San Francisco Fed about what exactly happened at SVB. My own opinion is, I think we're going to learn that there was maybe a little lapse in oversight or examination. Here was a bank who would lend money, but then require that borrower to have all of their accounts in that local bank. There were, as we read these news reports, there were just so many things that they did that a small bank or community bank, those federal examiners would be questioning them and forcing them to come up with risk management to address those issues. And so let's just see what happens in May. There's lots of calls for more regulation. I'd like to see what rules weren't followed by the examiners before we think about new rules to enact that ultimately will hurt the community banks. There has been talk, you heard Secretary Yellen and the FDIC, no depositor at these institutions is going to be left holding a bag, that the federal government is going to step in. And they're going to do that by special assessments on all of the other banks. The community banks stand firm to say, don't force us to pay for the big bank mistakes. And so we are actually standing with our federal allies to oppose any bank under $50 billion in assets from being forced to pay for the mess at SVB or Signature or any of these other too big to fail institutions.
How do you think do you think that'll succeed, Kevin?
We're hopeful. Community banks are going to be in Washington in May, talking with members of Congress and the regulators. And again, this is about reminding folks that there is a whole industry of banking institutions in our state, in our country, at the community bank level, who've been doing the right thing. They have been diversifying their depositors. They've been diversifying the business opportunities that they're in. We don't see banks where we're in all one type of loan or another. They're doing everything they can to keep the economy stable.
Okay. Unfortunately, we ran out of time.
I'm so
sorry. We have more questions, but you'll have to come back.
Thank you.
And we want you to come back again next week for the next episode of Behind the Headlines.